What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at Marathon Digital Holdings, ticker symbol MARA, on a variety of time frames in anticipation of the next trading day, Friday, February 16th. Well, Marathon Digital stock here today down about $2.39 a share, 8.13%. This is a volatile name, okay? Understand that. The stock is up after hours. It's up about 90 cents. Listen, as always, whether it's in our favor or going against our bias, we always absolutely have to take after hours movement with a grain of salt, assuming volume is low, which most of the time it is. Okay, but that being said, I mean, listen, if I'm a bull, I'd prefer the stocks up a point after hours or 90 cents than down 90 cents, right? But take it with a grain of salt either way. Let's start here by taking a look at the 1 minute chart, potentially some intraday revenue generating opportunity here around a core position. For those of you who may not know, this channel is all about the day-to-day bigger picture, but I'm a scalper at heart. It's what I do every day. And I think it's important, even for someone who just has a core position, if they enjoy scalping, their risk management is in check, they're trading tickers that are in play with edge. I think it's important to try to generate some revenue around a core position. I mean, a career is only so long. So if you're going to actively trade, actively trade. But looking here intraday, with this downside movement, well, first of all, let's take a look, up here in the beginning. I think it's worth mentioning. This is a little bounce. This is one of my core playbook trades, a self-fulfilling prophecy, subconscious bounce or rejection setup on that, plus or minus 2 standard deviation band off of volume weighted average price. Very common thing to look at. Turns into a self-fulfilling prophecy. And on a number of stocks each day, provides very clean setups with edge over time. So, this here could have been a very interesting entry to the long side, assuming it fit within somebody's potential ratio, okay? But here's really what I want to look at. If the stock is fading anyway, right, and let's say we have a core long position, I don't see why we can't take high probability little scalps with edge and, again, generate some revenue, which effectively lowers the cost basis intraday while we're watching the thing go down anyway. Makes sense, right? So I'm looking at these, and if we consider volume, another one of my setups for my playbook that I kind of developed over time, I call a breathe and go setup. Now, what is a breathe and go? It's actually relatively simple. It's really not all that complicated. But let me just quickly explain. Okay, so you see this pulling away here. Okay, and it's pulling away to the downside. This also is relevant on the upside. I just, there was a long video class on the Roensch Capital channel yesterday that I taught on this exact setup. Okay, just to the upside. Now this fades. Okay, and you see that the fade is on relatively higher volume. Then you see this pull in, and volume tanks off on the pull in. That's the breathe, right? That's the breathe part of the breathe and go. And in this one, we happen to be pulling back into the 9 EMA, just a simple self-fulfilling prophecy psychological level. Now, without the setup itself, EMAs intraday have very little to no edge. But when you start combining it with this volume setup, the volume fades, comes in. We've seen it respected in the recent past. What we can do is we can tier in for a little short position, okay? And then when it pulls away, ideally on higher volume, we tier out quickly. Just a little scalp, very minimal risk. I mean, literally risking like 10 cents. And, we can get out and generate, in this case, could have generated 20, 25 cents potentially. That's a pretty high R ratio trade. So anyway, listen, if you want to get my personal scalp setup alerts every single day, in real time, as I'm actually watching the setup, take a look at that first link in the pinned comment. The price of the membership goes up over time. It has consistently for the last 3 years. But if you get grandfathered in at the current rate, I'll never raise it on you once you're a paying active member. Okay. If you're looking to expedite things a little bit more, highly encourage you to take a look at that Platinum one-on-one. But let's now move on to the bigger picture here on Marathon Digital, which is the primary portion of this video. Okay, what I want to look at is volume and see, do we have any obvious changes in volume that correlate with movement in the stock? Okay, so you see here, we actually saw some consolidation off the open and then this dump off here. Okay, on that dump off, we did see a little bit of elevated volume, which, I mean, listen, bulls, you have to understand that bears are looking at that. Understand the psychology of the enemy always, right? The bears are looking at that and thinking, that's good. I like that a big sample size is agreeing with my sentiment. Okay, and then we did see a bounce, and we actually saw a little bit of sustained higher volume during that bounce. From there, really not a lot to pull here. Okay, so let's move on now, and let's get really contextual with the day-to-day self-fulfilling prophecy psychological levels to watch. What are those levels? Well, the most common ones. It's going to be the 50 period, that white line, and the 200 period moving averages, which is that gray line. Okay. Both of these are currently in play. First of all, that 50 period is 3.36% away to the upside. If I'm a bull tomorrow, I'm looking for a reclaim of that. We gave it up today. I want to see a reclaim, back test, hold as support. Okay, and if you're a bear, obviously you're looking the other direction. Ideally, you'd like to see a downside break of not only that 200 period. Okay, because we're on the 30-minute chart here. But ideally, that brings you to a test of $25 a share, which is, you know, a big psychological level, you know, especially if you're a bear. All right. Moving on to the 4-hour chart, you can see here that the same 50 period and 200 period, they're not incredibly relevant. I mean, they are a bit of a move to the downside away. You know, we're talking about a 20% move. So really, if I'm a bull, I'm just looking to see that 50 period move upside as quickly as possible here on the 4-hour day to day. Try to get some feet up underneath this move as a potential psychological area of support. If I'm a bear, I want to see both those things hang out downside as long as possible to keep that difference, that gap, as wide as possible. Now, let's move on to arguably the most important chart, which is going to be the daily. Okay, you know, obviously we have earnings coming up on February 28th. Not really immediately relevant. We'll start talking about that in the days, or maybe in a week or so as we head into that area. But listen, this gets really obvious here on the daily. I mean, remember here, it's the daily, so it's just going to show the closing price. But if we actually look at the stock, it's at about 28.15 here in the after hours. Again, take that with a grain of salt, but that is the real price. So we have to consider it's at 28.15-ish. Okay, here's what I'm watching. If I'm a bull, ideally I want to see 30 reclaim. Right, that's not out of the question. We have to talk about 30 here on Marathon Digital. I mean, it's a volatile name, and it's absolutely in the one-day question. Now, if you're a bear and bulls, this is ideally what you wouldn't want to see. A downside break of 25 is all you're really looking for. If we see a test of 30, if you're a bear, you want to see that reject. And if you're a bull, a test of 25, you want to see that hold as support. But those are going to be the levels to watch. Very, very simple here. When you're trading in between a channel with two such massive psychological levels here on the daily. Okay, let's take a look and just finish out here with the options bias. Good volume today, 633,000 total contracts traded. It's a good sample size. We can pull some good data out of that. Look at this, pretty heavy call bias. 393,000 calls, just under 240,000 total puts. Now, if we look at the short-term speculators, the 0 to 20 delta range, 63,000 calls, 125,000 puts. So we're seeing heavy call bias on the overall, but the short-term speculators actually leaning relatively bearish, okay? But every other section, the less, you know, not the extreme out of the money, just the slightly out of the money, the 21 to 40, all right? The 41 to 60 to at the money, and then the in the money and the deep in the money, all of those are leaning to the call side, giving us that overall ratio with the call bias. Just the short-term speculators are leaning bearish here. As always, listen, the option traders can be wrong, but just make sure your risk is managed. All right, stay in the game. Priority number one. Hey, listen, again, if you got value out of this video, please subscribe to the channel. Our goal is 1,000 in the next 10 days or so. I really think we can hit that with your help. Appreciate you guys, and I'll see you in the next one.